Axis Bank yesterday, the numbers came out at about 2 p.m. They missed analyst estimates in the third quarter, but the good news was that asset quality improved. This is something that we spoke about yesterday. Shraddha spoke about it extensively. But what have brokerages made of these numbers? Shraddha has the highlights from the brokerage reports for Axis Bank this quarter. Shraddha, good morning.
Morning, Neeraj. Broadly and not surprisingly, most of the brokerages have retained their rating on Axis Bank, but many of them have actually hiked their target prices by up to 12 or 13%, and that was mainly on the back of better than expected asset quality numbers. JP Morgan has maintained overweight but raised the target price from 650 to 700. What they're saying is that while they see the next 3-4 quarters as challenging because of the uncertainty over the timing and quantum of backbook provision, they believe that at 2 times price to book value ratio, Axis is their top value pick. Morgan Stanley has maintained an overweight and target price of 770, which is pretty bullish by itself. They've said that impaired loans have shown a good trend after a weak second quarter. They're expecting asset quality and core operating profit trends to be volatile over the next 3-4 quarters. But having said that, they believe that the improvement in impaired loans, that trend will continue over the next few quarters as well, and that will drive strong stock performance over the next 12 months. Credit Suisse has maintained a neutral rating but raised the target price from 525 to 595. They've said that they expect credit cost to normalize from 2.7% in FY18 to 1.2% by FY20, and CLSA has a similar view. They've maintained the buy, hiked the target price from 650 to 730, and they've said that they again expect earnings to normalize from FY19 onwards. So broadly a positive view coming in for Axis Bank, Neeraj.
Shraddha, just a couple of questions. CASA for Axis Bank wasn't the strongest. What's the trend been like? Are there any comments that came out from the management about how CASA could be over the course of the next couple of quarters?
Well, Neeraj, but having said that, in this quarter we may have seen a marginal drop in the CASA ratio, but broadly the trend has been of an uptick. So 47-48%, their CASA share stands at 47-48%. So that's not what the street is expecting to be a cause of concern. But broadly, in terms of the key takeaways from the press meet, the 3 important points that they highlighted. One was that the gross NPA ratios will continue to moderate from the current levels, which is good news. They've said that they plan to wind down the entire watch list by March 18. So by the next quarter itself, they will wind the book down. 2 years back or 8 quarters back, they had given a timeline of about 8 years by the time they would have exhausted or wound down their book, and that's happening. Thirdly, they have said that the story will now shift from bad loan recognition to now recoveries and resolutions in Q4. So again, I think what people will watch out for is strong recoveries, because this quarter also they saw recoveries of as much as 4,000 crores. So that's what the management highlighted, that the story is from here on is going to be.
But the central theme remains impaired loans and the improvement thereof.
Yes.